Now, most important thing, I see that currently a lot of people, I would say around 80% of the people who are trading are more interested in options, and that too on the options buying side. So it has been a huge kind of a dilemma whether to be on the option selling side or buying. But I always suggest that when you are starting, we don't have a huge capital when you start. So it's always better to start on options buying side. But whether it is the options or the future or the cash, what matters more is what is the right approach and how you understand the market. So I think 2017 is where we started with the organization Catalyst Wealth to cater to the training needs and to educate people to understand the potential of the market. And it was around 2021 where I got SEBI registered, and I've been regular on a lot of channels. And the most important thing, which if you would have followed me, would have seen, is that last 2 or 3 months when the market has been volatile. So if I talk about the down move, Feb and March, as well as the up move, we started from April. I have been having a 98% accuracy in the options buying trade. Now, how that comes and what should be the journey? So today we are going to start this. I'm looking at first of all, thanks to Vinod and the Bell DPO team for this forum. And I'm looking at a journey where within the next 3 4 months, all of us who are on the forum and all of us will be joining, will have a decent knowledge about how we can look at options buying, what is the approach on your normal technical analysis, and how market profile as a tool or as a trading, what you can call, I consider it as a trading platform honestly, because I call it as an X-ray of the stock market. So how it adds value. So we'll slowly go towards that. Now, so this was on. I have been almost an 8-time winner on India's only live trading show. That is where there's a trading channel. Three people compete for 1 week, and 8 times I have won that show. So I'll be again participating 2 weeks from now. Now let us start with basics, because I always want, see, even when you want to start with market profile or order flow, I always ensure that we are all on the same platform. What do you mean by that? Whether you know a lot of things or you don't know stuff, you're just starting, we all should come to the same level after the first session. So if I talk about what is the market, and a basic question if I ask is, being a mechanical engineer, I always have been fascinated by thermodynamics. So there were three laws of thermodynamics, and I have tweaked them. And what I said is that in the stock market, money is neither created nor destroyed. It only exchanges hands, and that's why I like this business. Why? Because if you have the right knowledge, now people say that 1% or 5% of people make money, but that is the rule everywhere in life. If you look at engineering, you look at medicine, not everyone can go up to the best level. It's hardly a percent of the people who go up to that level. So if you can put in an effort on that side, I think this is an area where, again, if you put in an effort, no one can stop you, because whatever you do, you will reap those benefits, or you will have to face that kind of a pain, would be the right word. Now that's why the more we learn, the more chances we have to participate well in the stock market. So always remove that first myth from your mind that 1% people do well, 5% people. That is the rule in all the walks of life. So if you are doing well in your other areas of life, there is no reason why you will fail here, right? Now let us understand one basic example with which I always start any of my sessions. And I think we have moved to an online model, but the one model which I always used to love was offline, where we all are face to face and we talk. So, anyways, now starting with this, so there was a particular crop which was cultivated in one side of the United States. So, for just to kind of consider the example, let us consider that something was being cultivated in West Bengal. Okay, and the conditions in West Bengal were all fine. There was no rain, and at that point of time, the crop needed heat, so there was ample heat in West Bengal. The crop was doing well. There was already shortage of the crop, so the prices should have gone up. But what happened is it started raining heavily in Bombay at a time when it should not have rained. But now understand one thing: next day the price of the crop crashed on the commodity exchange. Now everybody will find it strange that Bengal was fine, it was not raining, and there was ample heat, there was shortage of the crop, it rained in Mumbai, and how did the crop price crash? So the simple reason was the market makers, the people who had the bigger hands in controlling the price of this crop, were sitting in Mumbai, and at night when they saw irregular rains, that is, rains are not at a time when they were expected, they all panicked. And as soon as the early morning price opened, they started selling. So that's why it is always the perception of the price, the people who are capable of changing the price, which will lead to the move. It is not what is actually happening most of the times. In fact, in this result season, you would have seen that companies will give out of the roof stellar results. They started falling after the results, and companies which gave very average results, they started doing well. In fact, if you would have followed me on YouTube channel, you would have realized Catalyst Wealth is my channel. So there was one fine morning, 8 o'clock show on one of the channels, CNBC Awaaz, where previous day Voltas had posted a big loss. Okay, and I was asked, what is your pick for the day? So I said, I'm looking at buying Voltas. It was, if I'm not wrong, it was trading around 800 rupees. And everyone on the panel was shocked. How can you go ahead and buy Voltas when it has posted a loss? So I did, very honestly, I was not even aware that it had posted the results, but I had seen the chart. I felt it has made a base, and from here it can go up. And on that day, the top gainer on Nifty and the frontline stocks was Voltas. It moved by 8% from 800 to 865, and within 3 days it was 930. So that's why all these things are always factored in the price. And my first request to everyone who has joined today and who is looking at starting a journey in trading or investing is to stay away from all the news. Why? Stay away from the result day. What I mean is the news which is needed for you. What are the news that are needed? It is just the dates of major events. Like for example, if I know that today is a Fed policy, then maybe I'll not carry heavy overnight positions. If there is some major geopolitical event happening globally, I need to be aware of that, and maybe I'll not carry positions to that extent. So all these things are fine. But any other news that you are trying to read will always be present in the price. And as you start getting deeper into the price, you will very easily trade in the right direction. So if you know that one of the great traders has quoted that the market neither has a bull side nor a bear side, it only has one side, that is the right side. So our intent should be to be on the right side, and there will be times obviously when we will be on the wrong side. That time we need to know how to cut our losses immediately and wait for the right opportunity. To just relate an example here, he was continuously suggesting shorts in the market from March. And in fact, on one of the shows at 868 spot price, I suggested a short on Axis Bank where everyone was shocked. Why is he giving short? My stop loss was just 875 and my target was 820. It came down to 815. Now, after that, in the first week of April, when it started picking up, I did not give a buy immediately. I was still holding. And after my stop losses, obviously, which were trailing stop losses in good profits, they triggered. After that, so I think 16,900 was the base. My buy call started only from 17,400. So you should wait for the right opportunity. What people tries, I want to catch the bottom move, I want to sell at the top. That's not needed. Now from 17,400, I can confidently say that till today I have been recommending only longs, irrespective of whatever 2 or 3 weaker expiries you might have had. But I have always recommended long side till now, and I think still a bit of steam is left. Very soon we might see the mid and small caps. Now I'll talk about the stocks and the moves that are on my radar at the end of the session, but let us continue. So this is all theory, it's fine. Now, if we talk about what are the two approaches to investing or trading, that would be fundamental analysis and technical analysis. Now, just to give you a small example, what is good, what is bad, I would say both are good. And now one thing is, if you know only fundamentals, you won't be able to enter an exit. But if you know technicals and do not know fundamentals, at some point of time, that particular sector will show you that it's time to enter either on the long or short side. You will know the entry and you will know the stop loss. So I always give a more importance to the stop loss more than the target. Why? I should know where I have to exit, and I should know what quantity I'm planning based on my exit plan. The problem people have is, or the problem I see people facing is, they always look at a target and they try to fire in quantities. Now, why I'm sharing these examples is so that you relate to these mistakes and you don't do it. I had a word with one of the guys who called me 3-4 days back to join my options program, and he said, I started with Bank Nifty with 80 lots. I said, why did you short 80 lots immediately? I said that he said someone somewhere said it's a short side and the index may fall by 10, 20, whatever. I said, because he said you just can't go and sell 80 lots to start with. Anytime you start with 2 lots, 4 lots, 5 lots. Why? You test how the market is going. Once it goes in your direction, you start firing the quantities so that you know that my initial risk is very well defined. That is very, very important when you start. And then you keep on a process which is called as pyramid. So if you look at the difference, now one thing which I always say is if you want to know the fundamental analysis of any company, you need to know the management, the peers, the product is who are the other companies in that area, in those line of work, that line of work. You need to know the product. You need to know the government policy with regards to that product. You need to know crude. You need to know dollar because they impact any and every firm in some way. Then you need to know what is the global scenario with regards to that. All these things, if you combine together, it is impossible to track at one point of time. At the same time, these things are very, very dynamic. I mean, the price. If you look at the price, it changes tick by tick. But these things, they don't change tick by tick. They are same. For example, if you look at Mahindra and Mahindra, I always give this example to make people understand this slide. So Mahindra and Mahindra, when it was rallying one side around 45-50% in a couple of months, everything the people spoke on the channels was this is getting into SUVs, it will be the leader in SUVs, they are getting into EVs and all those things. The minute it started tanking 25-30%, they started talking about tractors. So what should we look at? Is Mahindra EV making firm, or is Mahindra SUV making firm, or is Mahindra a tractor making firm? Now it makes everything, but the news can be tweaked according to the move. That's why it is very important to understand the price and not get impacted by any other news or any other noise. Okay, so always remember this example, and this is very, very important, these 3 points, that the market discounts everything. The price knows what is happening and it moves in trends. Now previously, if you see, say around early 2000, that time the trend used to last for a long time in sectors, a year and a half. Now since all the global markets are strongly coupled, the trend might last for 2 months, 2.5 months on a higher side in a sector. Okay, sometimes it is just 2-3 weeks. So we need to know how to align our trading strategy to the sector which is in focus. For example, had you been just trading IT on the long side for the past year, you'd have made nothing, right? But had you traded auto in the past 2-3 months, you'd have made far more than what you made in the whole year. So that's why sectoral alignment or focus on the sector is very, very important. And your trading horizon has to be very less. Most important is this single chart or the slide. What phase are we in is very difficult to tell unless and until you go in the next phase. For example, if at current price of say 18,800 Nifty futures, for example, where are we? Are we in maturity distribution or are we in advance and growth? Now that is something that we can realize only when the next cycle starts. But one cycle which is very easy to identify is the death. What do you mean by the death cycle? So somewhere around March, you can say that the market was in the death cycle. Everybody around on the street was bearish and every stock was going to zero according to people, right? Now you can see that there is a lot of euphoria. So we all know that the two emotions in the market are which we need to understand and control, which is not easy, but yes, it can happen, are just fear and greed. Now that's why I always talk about the stop loss. Once you put the stop loss, your fear is out because you are planning the quantity accordingly. You make it a trading stop loss, you follow a certain process, let the system book your profits, your greed is also out. So that's how you can, implement very simple things, keep yourself out of the system and not question the market. Are you in growth, are you in maturity? Just follow the market and the market will give you the exit. And it might also end up giving you the entry very near to the next reversal, right? So that's why your trading system should be designed in that. Now, so we all know what is the chart. Normally, for now, I think we will be talking about the candlestick charts. There is one system which in my 1 year program I talk on close line charts, but everyone we talk basically about candlestick charts. So we all know what are the trends. One is an uptrend. Now the main thing we should be always remembering. We talk about that, but we don't follow that. Now what is that? Always be a buyer in an uptrend. Now obviously your last entry will get stopped out, right? That is where you can start looking at the market with another view and wait for the price to confirm. Now, what the mistake that we do is the smart people, mainly people like me who come from an engineering background, and when we start trading, we always want to show the market that we are intelligent, and that's why we can code, We can make all those systems. We can work on informatica, business objects, Unix, AI. So what is this market? That is how we start, and that's why we want to sell at the top. And we see that the market makes another top, or we go in this trend. We open moneycontrol.com, we go to the 52-week lows, and we feel that what, here is a smart engineer who is the only person who knows that this is at a 52-week low. I'm going to buy it, and it's going to make a 52-week high soon. And what we see, it makes another low. Then we buy more, it makes another low. So that's why the first thing you should do is keep the intelligence out of trading. It's not needed, it can only cause harm to you. Keep your ego out of trading and just focus on the system and the process that suits you. You know what you mean by suits you? So always try to learn more. There will be one point where you'll feel, what, now for example, till 2014-15, I had not even heard about market profile. I was very happy with what I was doing. Suddenly I saw that there is something that the investment banks were using globally, where I was working, and they could find a stop losses placed by the other banks, and make moves against them. Now that's where I felt this is very interesting, and if I add this dimension to my trading, it can definitely help me take better entries at a small risk and maybe a bigger reward. More than the reward, I always try to enter when the risk is small. So because I'm okay to get stopped out, but against that stop loss, I'm waiting for a move in my direction where my first step has to be to bring the stop loss at my cost. Then I'm at peace with the market and I let the market do its job. So because of that, I try to learn on this side, and that's where I interacted with the Bell TPO team around, I think, 2018-19 is where we started, and with this software, and I realized the potential of market profile. That's when I clubbed it with my systems, and I saw that it is fine tuning the entries to such an extent that on Nifty I could enter with a stop loss sometimes on an intraday basis or even positional basis as low as 25-30 points, and on Bank Nifty even 50 and 70.5 points, which was very less in terms of futures, and stocks hardly 5566 points. Stop losses I was getting for good trades. So that is where I realized the potential, and I started to go deeper into it. And this kind of a market, when you see, always try to stay out. There are obviously some option selling strategy, but I'm not going to talk about them because initially I don't want people to get into that option selling with a small capital. Always better to wait, start with cash, then slowly go to options buying, then look at small futures trade. Ideally, some small commodity lot, mini, or some currency where you get a hang of futures, then move to the bigger ones. Okay, and now we come to the main topic, which is a basic, that is what marking the supports and resistance. Now supports and resistances, understand one thing, more than the ones that you mark on the chart, very important are also the round numbers. For example, if you go back to 2017-18, you look at Maruti, you will see that the high bid was 9,999. Now obviously it was what we call as an uncharted territory. What do you mean by uncharted? That means it was the first time that a price was going there. In spite of that, it resisted. Why? Obviously because of a round number. Now we think in terms of round number, that's, which means what? We think that I'll buy this at 100 and we think I'll sell it at 150. We don't say I'll buy it at 102.5 and I'll sell it at 111.5. So that's why the mass emotions are manifested in terms of price at round numbers acting as a support or resistance. And most important is when we are in a growth and advanced phase, the resistances are breached. That means you get breakouts. And when we are in the decline, death, decay phase, that is where your supports are broken. And now, if you look at, let me show you a basic this thing. Now, this is one of my software, but the good part about market profile is, I mean, Bell TPO is that you also get the conventional charts and you also get your normal. So here, if you look at, if you want to mark the support and resistance, do a basic thing. Just identify from where the price has turned. Ideally, always good to mark on the weekly chart, but even if you go on a daily chart, it's not big deal. So if you look at this level and select the horizontal line, very basic things. Why I'm showing this, so that in the first time that we are interacting, we all come to the same platform, and then from the next sessions onwards, we start taking things forward. So if you see the price turn from here, right, and somewhere around here, now this is what, this is Jindal Steel. So I just randomly opened the stock. Now we all know that support once broken may act as a major resistance, but we see that it is trying to again come back into the zone, right? Now, whenever you see this kind of an activity, the one thing which should always come to your mind, along with the price before putting on any other indicator on the chart is nothing but volume. You need to see whether the move is backed by volume. And if you see this kind of a volume, you should know that something is happening here. This was just an example. But if you look at Nifty also, the same thing you'll see. That see this was a resistance, this was a resistance. The price turned from here. So if you just mark it, now if you see this was crossed, and the next time the price came here, it acted as a support. These are all basics. So previous resistance, see again crossed, and it acted as a support. So this is how but why it happens. So if you try to understand the emotions, see any candlestick pattern, what the mistake people do is, see we are engineers. So what we have done is we have kind of, if you go back to your engineering days, we have always referred to those small xeroxes instead of looking at the big foreign author books, and we have written the exams and scored well, right? So here, why do you want to remember all those big candlestick names, the three black soldiers and all those things? Understand the emotion. Now, a basic emotion would be what? See, if someone, there are three people in the stock market. They are not only bulls and bears. There's a bull, there's a bear, and there is a spectator. Now, who is a spectator? Who is sitting outside, who is waiting on the fence for an opportunity to enter. So, say for example, let us take Nifty is has gone to 18,000, okay, and from 18,000 it starts falling. So people who bought at 18,000 and Nifty comes to 16,000, everyone is stuck. There are people who have not put stop losses, just holding. So the next time the price comes to 18,000, right? That means say it was a previous number, the price has come there. What would be the emotion? What would be the memory? All the people who would have bought would think, oh my god, last time it fell from 18,000, it's my time to sell. At the same time, the people who bought at 16,000, 16,500, 17,000, they would also remember that last time the price tanked from 18,000, I should sell here. And they start selling. But they see something different is happening. The price goes to 18,100, 18,200, 300, and they feel, oh my god, I am left out. And the same feeling goes to the spectator who is waiting outside. So this was a resistance, but the price has gone up. The next time the price comes to 18,000, now the memory, see, we only have short-term memory. So what is the latest memory? 18,000 was the price from where it went to 18,300. So everyone who sold first will try to enter. The person who is sitting on the fence will try to enter. That's why this previous resistance, which was broken out and the price is taking a dip, the entire emotion changes to buying, and that's where it starts acting as a support. Okay, so that is the whole emotion, that is the whole thing on which your candlesticks or anything is based upon. Similarly, the same logic holds true for a previous support. So say for example, previously 18,000 was a support. Now market has gone to 18,800. It comes down to 18,000, and 18,000 is broken. You go to 17,500. So there is fear and panic. Next time you come to 18,000, the emotion will be, oh my god, my cost price has come, let me exit. So that support which was broken, it starts working as a resistance. You start getting bearish candlesticks pattern, and that's where you can look at a market reversal. So that's how the emotions play in the stock market, and that's how when you align to the emotions, you can align to what I said is the right side of the market, right? And that is all I kept in these slides. That is, role of a support is very initiate, long positions, role of a resistance, and how the emotions work, the round numbers, retracement levels, all those things. So this slide explains everything in very simple things. Say a previous support broken, this is another short one. The next time the price comes, this support may act as a resistance. See, always when you are trading and analyzing, use the word may. What I see, most people say that this support is broken, now this will act. See, when you say will, your mind says go and short. But when you say may, your mind says wait for price action. These are small differences which, if you remember, your actions will be better. So now this was a resistance. The next time the price comes, there are high chances that it may act as a support. And only, see, that's why when you say may, your mind will wait for a bullish candlestick pattern here. When that bullish candlestick pattern comes, when the high crosses, that is where you'll take an action. But if you say will, as soon as the price comes here, pinpoint, you'll buy, and maybe it may go here and then come up, your stop losses will be triggered. So that is the difference between how you think is how you will act. Okay, now talking about the basic candlestick patterns, The basic thing is, what is candlestick? Candlestick. So your opening and the closing are joined, and that forms the body, and the highs and the lows are the shadow. The simple thing is, if the closing of that particular session, what do you mean by session? So if you are looking at a daily candlestick chart, so if today's closing is higher than today's opening, you get a green color. If today's closing is below today's opening, you get a red color. Why I'm emphasizing on this basic point? Because most of the times, sometimes you get a wrong message in your mind that, you know what, it's a green color candle, so we are trading above yesterday's close. That's not the case. Maybe your gap down, but because it is green, because you are trading above today's opening price. So the color of that particular candle is only depending on the opening and closing of that candle. And always remember the upper shadow. Now understand the emotion here. It opened, it tried to go down, but did it close here? No, it went up. So what happened here? Someone bought. So whenever you see a lower shadow, it is nothing but a buying emotion. And when you similarly, it went up to here, but did it close here? No, it closed little lower. So what happened here? There was selling. So whenever you see an upper shadow, it is nothing but selling. Always remember that. And whenever you see a neutral candle, neutral means something like a almost like a doji or a small hammer. The color is not important, which means what? You can have a red hammer. Say for example, it opened here, went down all the way, and made high but closed here. So it's a neutral candle, red color, but it's a bullish candle because it has a big long lower shadow. So the color of small candles is not important, but the pattern or the size is important of the shadows and the body. Okay, we'll talk about all those things that we go through. Now, people talk about all the terms like mariposa and all. Now, I don't even know these terms. I hear them on shows, and that's why I'm talking about them. All I know is, if throughout the session the bulls are in control, if they are open and they are not going down, they are always going higher and higher, and they close very near to the highest points of the session, which will be on a daily or an hourly or 15 minutes. Below 15 minutes, I don't know charts. I don't look at chart because they are made for making losses. Remember my statement. Below 15 minutes, all the charts are made for making losses. So below 15 minutes, if you are going, remember you are going towards that trap of making a loss in the stock market. Always stay on 15 minutes or above. And that is how the market profile is also beautifully designed, which we'll talk about when we go to market profile. So long green candle shows that you are controlled by the bull. That session is controlled. So whenever a resistance is broken, that means, for example, if I want to see that this resistance, there's a breakout. So I don't want these kind of what I call as neutral candles. I want this kind of a big candle, big bullish candle. And similarly, when a support is broken, I want to see a big bearish candle. So that is very important. These kind of small candles, people feel they are breakouts, but they are exactly the opportunities to put traps in the market against the weaker hands. That is either the weaker buyers or the weaker sellers. And every bullish pattern will obviously have a corresponding bearish pattern, and vice versa. So now in this, what happens is the session opens at a particular level, and the market cannot more often cross even the first 15 minutes or first 1 hour high. The bears continue to make lows and lows, and the session closes towards almost the lowest point of the day. Now that happens to be a what you call as a completely bear control day, long red candle. And there are beautiful strategies in market profile where even if you trade one expiry this way, forget about now. Okay, now let me correct one more myth. People feel that the biggest money is made on expiries. Now let me tell you that I have identified a few days which are non-expiry days. That is where the index, specifically the index, gives the biggest moves. Okay, we'll talk about them in the next sessions that we have. But for now, don't get into that trap of being more aggressive on expiries. And I can tell you because we all started that way. And when I can share my mistakes, that's when I can avoid you from making those mistakes. So see, previously, if you go to the 2015, 16 till 2017 market, it was not strongly controlled by the option writers. And at least if you talk about 52 weekly expiries, used to have around 26 to say not 30, but at least 27, 28 very strong one-sided expiries. I'm not talking bullish. maybe bullish or bearish, but strong one-sided expiries. Now what has happened is that out of 52, you'll get hardly 12 or 13 strong expiries, but there are very strong days on non-expiry days. So what are those days and what are those things? We'll obviously talk. Now, talking about a few other important candlestick basic patterns is a doji. Now, how doji is important? So one stock where I was continuously talking about weight was Reliance, and I said unless and until we don't close above 25.40 spot price, do not go long. At least let it close about 25.30 spot price. And if you look at this particular thing, there was a doji, there was kind now someone might call it as a shooting star. Overall, as I said, it is the emotion which is important, not the name, right? In both the patterns, on break of a low, you are going to exit your long, or if you are at a resistance, if the stock is weak, you are going to sell, right? Both the things are different. I said you are going to exit your long or low break if the stock is strongly uptrended, and you are going to sell if the stock is weak and there is a rally to a resistance and you get this pattern. Now all the people who bought here, see this, people feel it's a breakout, but as I said, the candle has to go through a big bullish candle. It did not. It almost closed at a resistance. This is where people were trapped, and now this, if you're trading futures, obviously it's a stop loss. This is just an example because it happened recently, and in fact if you see, this was a previous support, so it acted the first time the price went, it acted as a resistance. That's why you need to be cautious, and even without indicators you should understand what is happening. Now here if you add a dimension like order flow, you will realize that on these 2 days there was absolutely no aggressive buying on Reliance, and that will help you from entering here. You will wait as a mature trader. You will see that there is no aggressive buying. There are no aggressive buyers. We are in fact very less buying, and there might also be a concept of what you call as limit selling. Now, when you understand this, when you mature to that level, even if you don't short, you will at least not enter long here and you will wait, right? Now, if you see, if you know the basics, at least you can see that it's kind of a 45-degree trend line, and the Reliance has almost come here. On the last day, the selling volumes in the last 2 days were not that great. So now if we get a bullish candle and basic price action says that there is a gap support here, so all those things are now looking better. In fact, without even drawing, I feel we might be at a fifth golden ratio kind of. So check this. This is exact 0.618. So that's why when you start observing the chart starts talking to you. So it's now a strong support where your risk is very low. And here, if you get a bullish candle, if the high crosses, definitely you can look at a long entry in Reliance, because then you might say that this particular level may continue. Right? The word is may act as a support. And when we start buying, now the mistake again people will do it. You buy here, you straight talk this level. 26 तो आ जाएगा, 2600 may be seen. What you need to know is here is a gap, so I need to respect the gap. Once it comes here, I'll put a trailing stop loss. If it goes through the gap, good, I will continue to raise my trailing stop loss. But if it reverses, my profit will be booked. Now, when you do this, you are respecting the price, you are respecting the market. That's when the market is waiting to reward you and take you to that 1 to 5% of successful traders, and not in these people who are getting into each and every motion market. Okay, I'm trying to give you examples which will make you realize the concept, and that's how I prefer to teach, and I know them because I see them day in and day out. You talk, in fact, I happen to be on the expiry day of 25th, this thing. Let me just share this example. This was recent on Nifty. So this was the expiry, I believe, right? 25th. And the market opened, it started going down. And on every Thursday, I'm on CNBC Awas, where I give the hero or zero call on expiry index options, where a very small premium option, either it goes to zero or it gives a good reward. So I said confidently at 12 o'clock that since it is a 25th May expiry, and I remember that the previous 25th May expiry was in 2017, where the Bank Nifty options had gone 8x and a 120 rupee call had gone to around 740, 860. So, and that based on that and that time cycle and the price action, I am expecting a strong short covering in the afternoon, and the 18,200 call, which is currently trading 45, I am looking at it going to 95 rupees. Now, why I could say that constantly when I'm talking on one of the India's biggest channels, my reputation is at stake, my brand is at stake. So people might, and there are trollers waiting to see failures. So when this happened, the 45 rupee option did not go to 95, it went to 130 in 2 hours. Now, why I remembered it? It's because I have participated in those moves. Now, if you look at this, when I said 25th and I quoted that year, so it was very, very simple that I had traded in that year. I knew that date. So look at this 25th May was the expiry of 2017. And if you go to the chart after the session, go and check the Bank Nifty chart, you will see a big move and the options that move. Now that memory was in my mind. Similarly, when you talk about 16th of June, which we are heading into, the one stock which always comes to my mind is Tata Motors. Why? 16th of June 2016 happened to be Brexit, where Tata Motors showed a big emotion. So normally, if you see 14 to 18, you'll always see big move in Tata Motors on either side based on the trend. But that is the time where I am very alert on Tata Motors. Whereas if you look at Feb, May to March, that is where Jindal Steel makes a big move. So you need to know the time cycles of the stocks. Now, that's where this knowledge, if you have, and you get advanced tools like market profile, order flow. In fact, on order flow, somewhere here, you might get an earlier indication of a strong accumulation or a strong buying. You might see aggressive buying happening, and that might end up giving you an earlier entry. That's why this whole knowledge, candlestick, indicators, time, sentiment, this when you club with market profile order flow, it gives your trading and investing a completely different dimension. Okay, so coming back to this topic, that's where a doji works. Now remember one thing, a mistake people do is they try to trade on the low break or the high cross of doji. I suggest wait for a close above or wait for a close below, then trade a doji based on where the doji has occurred. Sometimes what happens is just at the start of the move there is a doji, so that might be just a halt. That's not a reversal sign. Doji, which occurs after a strong rally at a resistance, is more important, and doji, which occurs after a strong decline at a major support, is more important. So all these are just names. They are just to write essays, but you should understand what are the emotions. Similarly, your preserved tops, which means what the closing of the previous session and the opening are same, and then they may give you an earlier entry. So closing and opening. Similarly, here if you see you have a bullish preserved top and a bearish. This is the bearish one. Similarly, if the price opens here and goes here, that is a tweezer bottom. Similarly, you have a shooting star after a rally, which means it opened, tried to go up. So high upper shadow means what? Selling. So it's a bearish pattern. Then you might have you make it a three pattern. Then it's an evening star. That's what I said. The pattern is the same. The emotions are the same. How you trade it is important. Okay. So remember that and try to work on these things, which is what fear grid I told you. Your trailing stop losses, your initial stop loss, your position sizing. These things will help. Impatience. What is impatience? 9:15. If I don't put in the trade, I'm making a sin. This emotion that we have when everyone has it. I have done it for a long time. Every single person I know has done it. If anyone says I have never done it, I'm sorry, but they are lying. Everybody has done it, and there are times when even now you feel like doing it. That is the urge you need to control. Wait. Okay, in fact, market profile gives you a concept where you can get better moves after first 1 hour. So that's why waiting can be strongly developed by your market profile knowledge. Second, hope and result driven. What is hope driven? I showed you the Reliance example. That simple doji going above, you hope that it's a breakout, you get it. Result, you feel target 2600 will come, you get into Reliance. Those are all the wrong approaches. And adaptability. Adaptability is what? Okay, fine, you got it, but immediately accept there will be times when we'll go wrong. 100% there will be times. But once you get that, understand one thing, you have to accept that I've gone wrong, you have to exit. I still remember 2018 or somewhere, I got trapped in Pidilite. I was looking at a trend line breakout and I realized that I got in on the bull side, and that is I bought it in futures, and somewhere around 320 I felt that it's not going normal. At the closing, I normally prefer closing charts. So when I saw, because it was candlesticks, now when I added market profile, obviously you start getting earlier indication and order flow. But at the end of the day, I saw there was a bull trap, which means what? The bulls were trapped. I was one of them who was trapped. Immediately on next morning, I exited at open without seeing the price, market exit. I booked a small loss. Within 2 days from that day, Pidilite tanked 6 to 7%. Now imagine had I not realized that I was wrong, and or maybe other thing, even after realizing, say I had just stayed. No, because I have taken, it will go up. Had I attached that kind of an ego, I would have lost big money. Now because I could wait there, I could go on and participate in another opportunity and protect my capital. So that adaptability is very, very important. The one which I told you, shorting in March and then getting stopped out, trailing stop losses triggered, but giving up on a 400 pointer, 17,000 to 17,400, not a single long trade, but from 17,400 to 18,800, only and only longs, not a single short trade. That is called adaptability. Okay, that is what we need to know. It is not about entering at the bottom, selling at the top, and say for example, now I always say that when you talk about mid and small caps, based on the knowledge I have been rewarded very well in the mid and small caps. Now what happens is I had entered this stock graphite, if I remember 2016 at some 110 rupees. And by looking at a pattern, I told my co-founder Rahul that I feel it might go to 250, 300 soon. And it actually went. Where we exited, we booked and we were happy. My quantity was good. So exiting at 250, I made a good amount. Now there was someone who told me that I had entered at 120, 125. This person had entered at 90, 95. And he exited at 400. His quantity was 100 shares. Now what did he make? Nothing. So how do you make the most of that? But that does not mean I bought a huge quantity at 120. No, I added and I made the most. See, for example, if I'm looking at a 100-point move, if I get 60, 65 points with the right position sizing, I am more than happy to go into the next. I don't attach any ego. Now these things come with maturity. They are very important. Whereas now, even by looking at market profile, it gives you certain indications that there are lower references left. Now, even in the month of April, it showed those lower references. But now here, my knowledge of candlesticks helped me to tell me that these may come later on, maybe after July. For now, it is time to focus on the upper references. Now that's where market profile gave me the confidence to trade towards the upper references. Candlesticks did not show me the references. It also showed me the resistances. But these references help me to continue. So that's how you need to club both the things. And if you want to move from these negative areas to positive areas, there are these areas where you have to believe in your trading system and you have to act according to that. Make it a habit. Be accountable. What do you mean by accountable? Every single trade that you do, you journal it. That means you maintain an Excel or whatever you like, and you journal it. You write down your date of entry, buy, sell, price of entry, initial stop loss, exit point, what were your emotions, what was your risk, what was your quantity, and how you manage the trade at the end of it. Why? 2 months, 3 months, 2 years from that date, when you go back and you look at the journal and the chart, you remember very well what had happened. And that's how I could recollect that 25th May expiry so well. Okay, and be system and process driven. All these things we already know, moving averages we know, basic things. Now, so market profile, my program is called A to M of trading. Why A to M? Because you have 13 this thing, what you call as letters, A to M in market profile, and these A to M have changed my entire outlook towards market. I call it as an X-ray of the market, which actually does an X-ray and shows us. So if we talk now, we spoke about initially that candlesticks, how you need to know the patterns, how the momentum indicators may help, and all those things. Now market profile helps you to understand one very, very, very important thing. Let me show you here first. So say for example, I'm looking at Nifty, okay, and I want to know at which price was the market spending maximum time in that particular session. Now this is not going to tell me in any way. See, this is the session. Say this was what, 26th of May, that is the day after the expiry, Friday if I'm not wrong. Yeah, Friday. So now this is telling me that the big. What was the price where the stronger hands were controlling for major portion of the day? Now that in no way can I gather from here. At the same time, in this whole move, who is controlling this move? Are they short-term traders? Are they strong hands? Are they weaker hands? Can there be a move against them and then will the market go up? Or it may just continue to follow this, what I see as a small trend line around 60 degrees. So what may happen? Now, these kind of things, market profile will give you better insights and it will tell you how to kind of align yourself. So if you look at it, it will show you that what is the price at which maximum time was spent. That's why there's a concept called as time price opportunity, that is TPO, which comes into market. I'm not going to bombard any concepts on you today, we'll do that next time, but just to give you a flavor of what happens is, so you know who is in control. Are they the short-term traders? Are you going to trade with them? If you are an intraday trader, maybe yes. If you are a swing trader, maybe no, you will wait. And if you are a positional trader, definitely no. So are they stronger hands, or if, or as we call them, the other time frame participants who are stronger than the shorter ones? If they are trading, I am a swing trader, definitely I'm going to trade in their direction. So those things market profile can help you. And in fact, in the afternoon session, as you understand market profile, the main thing which happens is you don't have to decide. It gives you information as and when the session goes through. Okay, what information, how you can use it. The main thing, see, if you understand basic biology, in basic science that we did, there is something that we call as digestion, where you digest the food. After that, there is something called as assimilation. Now, assimilation is where it goes into, now I call it from a trading perspective, it goes into your soul. So market profile takes the price into your soul, where the first thing that you get rid of is you don't dictate to the market. You know what? I have got Reliance. Now you need to go to 2600. No. What you say is, I have entered Reliance at 2520. My exit point is 2495. Let us see how it goes. And because it is a 30-point risk, I am starting with one lot or two lots. Then I'll add more. Now, when you do that, if the 35 points exit, you already planned it, it's not going to impact you. And it goes in your favor. Then is, oh my God, you know what? The price is showing me I was right. Now, first thing, let me bring the stop loss to my cost, because I don't need to be punished now, because the market is rewarding me. And then it starts going further up. Market profile or order flow shows me aggressive buying. I'm going to add more. So that's how you can continue to build up using your basic knowledge. Now, basic is, I'm not talking about bullish engulfing, bearish engulfing, or some moving average crossing wall. That is too basic. I'm talking about your conventional tools knowledge, which is maybe your RSI, MACD, or your super trend, or your trend lines, Fibonacci gaps. All these things are extremely important. When you club them with market profile, that when it becomes far more powerful. And when you add order flow, another dimension to it, then I think you don't need anything else, and you need to avoid just one thing, which is the news. Now, just to show you a few examples, recent ones. What happened is, so this was 1st of June, and see, this is the opening. Okay, this is the nothing but your bank nifty. It opened here and it exactly rejected here. Now, understand one thing, I had no short view on the market, so there was no short trade I recommended. But I definitely could exit my long looking at this, or even avoid shorting looking at this. But what was this level is what we are going to talk in the next session. Why it reacted there? Now, was there any way that candlestick would have shown me that level? Absolutely no. Was there any way market profile would have shown me? Yes, it did, and it helped me to exit. So that is where your knowledge of market profile, basic knowledge also helps you. Now, these are the kind of references, which if you see might help you to aggressively trade on the intraday basis, and also carry small positions on the positional basis for these targets, keeping your stop losses in a proper way and at the proper level. Now, had this not been there, I would have been a bit reluctant looking at the, we are nearing the previous all-time high, so there may be reactions. But when I see this, I'm a little confident enough at least to carry small quantities overnight, which might reward me right at the opening with a gap up to help me trade with that money for intraday. Which means I'm using the money given by market to sponsor my intraday stop losses or the intraday risk that I'm taking. So that is the way a positional view can be developed. Why I put this slide is because most of the people tell you that market profile is for intraday. It is, yes, strongly it is. So is it not for positional? Absolutely wrong. In fact, it is a beautiful tool for swing trading and for positionally carrying also, because it will show you insights that candlesticks won't. Okay. Now there is an observation which I have made that on major bottoms which are made, okay, or before a big move comes. Now, why I was looking this 25th May expiry. So why on 26th I was strongly bullish was based on the opening and what were those indications. So we'll talk about all those, but they were only on market profile. And as we go through this series, which we'll talk about more, we'll talk about how to make the right moves in the market and how to go ahead. And anytime when you learn or when you look at an opportunity to learn or to look at a new software, one thing which I always say is a big differentiator between people who grow and people who just wait on the fence and never go into the growth stream is what this one of my most favorite authors, what he said is, never say that you cannot afford anything. Always ask yourself how to afford it, how to be there, how to get that, and based on that, when you keep your approach, you will always do it. Before I hand it over to Vinod, we'll talk about a few stocks. Okay, so one stock that I already spoke about, Nifty, Reliance. One stock that I'm tracking is this one, Ramco Cements. Okay, I have a view that currently, so this is the let me talk about do I have the spot price anywhere? Okay, so let's see here. So this is nothing but investing.com now. So if you look at this Ramco Cements, if you see the spot here, this closed somewhere around 914. Okay, now my view is very soon, that is maybe 7, 8, 10 days, that is in the month of June itself, we may see 940, 945 levels in spot here, and this somewhere here should be a good your what you call as the stop loss. That means if this zone breaks, then our view goes wrong. Till this zone is intact, we are fine, and we may very well target. Cement sector is picking up, even this stock which had a lot of noise in between. So keep an eye on this sector first, that is cement. Ambuja doing well, picked up from this trend line. Now without drawing also you should be able to figure out, if you look at this trend line, so this is the trend channel, this is where it is kind of reacted previously. If it goes through, then this depth may be replicated, looks good is all I mean. Other sector definitely which is picking up is metals. So I read a lot of negative news, a lot of people, a lot of WhatsApp groups. That's where I formed a bullish view. First thing, I'm waiting for people to talk negative and then the price to confirm. So after those negative things, these two things happened. But was there a follow through? No. Now what happened is you got discounted. Now I gave a buy on metals here. So people might say, why not here? No, I'm not interested here, is my simple answer and a blunt answer. As I said, I don't wait to buy at the bottom. I wait to buy at the right price. So this is where I give a buy somewhere here. Now, if you look at this, the move has started well, but the main thing, the volume. Look at the sector. Okay. I'm sorry. Everywhere you see the same thing. Now, same thing. Okay. Look at the volume here. So that's why keep an eye on metal sector. Now, for if you look at Hindalco specific, this gap is where you can keep a minimum level, say 435, 440. Once it goes through, so when the price approaches here, we need to trail. Once it goes through, then you can definitely hold for the higher targets. That is one thing. Other sector, which is doing really well, pharma. So I think this one stock had done very well, but when you look at it on the highest time frame, you will see that this one, this is what 2013. Now because in futures the data is less. In fact, if you look at spot, it will give you a better picture, which I wanted to. The point that I wanted to make is this. So this is your Glenmark monthly chart. Okay, and when I look at 2008, what is the price here? Somewhere around 610, right here. This is 2007. What is the price now? Same 610. So those who talk long-term investing always show this chart. Show Tata Steel, same rate from 2008 till now, considering the bonus and all. So those who feel that this has already given a big move, no, it has not. It has just started and it may give a big move. So look at this stock, that is the sector in fact. But more than this, I think in the next few weeks or so, The major sector to focus on, or the major area, would also be the mid and small caps. So I think a few stocks that I recommended some time ago were these ones. They, I think they already moved. I recommended 170. This is around 240 now. And the stock I had recommended, now this is all there on YouTube, Twitter. So it's not that I'm waking up now, because those who are maybe talking to me for the first time, you always have a doubt and always keep a doubt. Never go by what is said. So this was what I recommended on the 2nd of Jan, if I remember, 102. Where is so this is, yeah, same price, 102 or something. So that has already come to 250. So never, ignore mid and small cap. There are good opportunities. Always track them. Now, coming to this, I think we'll have a series of sessions, and I plan to visit Bangalore somewhere this year, which Vinod might talk about later to you. And I'm looking to have a face-to-face session with you all where we'll talk about options for that day. We'll try to look at strategies, and we'll have a good one-on-one face-to-face session and look at stocks for that particular month or week whenever we meet. So I think I'll hand it over to Vinod from now. And the few stocks that I mentioned, the track will be meeting the next session maybe a couple of weeks or so from now. The things that I spoke about today, focus on them, and we can take it forward.